Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we break down the world of investing from beginning to dividend so that you guys can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity buddy, Alec the Ren Renahan. How are you going, bro?
I'm very good, Bryce. Very excited for episode 40 of Equity Mates.
Boom!
Can you believe
credit
it?
to us.
The good thing about these shorter episodes is that we're going to rip through the numbers.
We're going to hit a century before you know it. So, it's worth mentioning the market is down, Ren. Down.
Yeah, down, prices are down.
Oh, tweet. So the market is below the point where it was, it's below the lowest point of the correction that we discussed a couple of episodes ago that occurred in February. Because volatility is back. That's another episode in itself.
Yeah, volatility's back and the trade war is heating up.
The trade war is heating up in a big way.
That's probably why it's dipped again.
Yeah, so Dow Jones down 572 points overnight, 2.5%. So we're probably going to see our stock market down on Monday because, as we always say, that we're a reactionary market to the States, and that is a reaction to Trump coming out on Thursday afternoon, our time, and saying that he's going to triple down the tariffs that he's hitting up against China to the value of about 150 billion. But that's also another episode. We actually did the trade war a few weeks ago.
Check it out if you haven't listened already.
Yes. So market's down. What can you do when the market's going down? What does happen when the market's going down? And usually it's when the short sellers rub their hands together and look at all the money that they are making. So we're going to do an episode today, Basics 101 again, on short selling. You may or may not have heard of it. It's a strategy that investors deploy to often counterbalance their portfolio and diversify some risk. And it's essentially where they profit from the fall in price of a stock. Do you want to add anything to that, Ren?
Well, it's a particularly timely time, yeah, I guess, to talk about short selling, because one particular short seller and one particular Australian company has been in the news this week in a battle with a short seller, an American short seller. So we'll give you the details about that. But first of all, we will start with the basics. How do you short sell, I guess? Well, no, first of all, what is it?
What is short selling? So from my side, short selling essentially is where you sell a stock when you don't actually own that stock, because you will then sell it at a price above what you actually bought it for.
Well, yeah. So
now you can give a much more definition.
What it is betting on the price going down. So you profit on the price going down. Traditionally, how it was done is, as you said, so the short seller would borrow the shares from someone else.
Yeah.
So if I borrow shares off you and sell them into the market at $100, and then we agree that I will give you those shares back in 6 months, what I'm betting on is that in 6 months' time, I will buy the shares and then give them back to you. And I'm betting that in that 6 months, the price has dropped. So if I borrow them off you, sell them for $100, 6 months later, they're trading at $80. So I buy them in the market at $80 and give them back to you. You get all your shares back, and I've made $20 per share.
How good?
Yeah, pretty good.
Seems simple.
But if on the other hand I sell them at $100, 6 months later they're trading at $120, then I still have to buy them to give them back to you. So then I lose $20 a share. Now the big risk with short selling is that your downside, so your risk, is unlimited.
Unlimited, you can lose everything. Well,
you can lose more than everything.
More than everything.
Because when you think about, if we buy a share normally, our risk is limited to zero. So the share could go to zero, but it won't go into the negatives. So your risk is capped. Your downside is limited to the amount of money that you invest. However, if you short sell, the stock could go infinitely high, and
Yeah.
so there's no limit on your risk.
Yeah. It's a very risky strategy, and it's one that, yeah, as you said, Ren, you can lose an infinite amount of money.
Yeah.
One thing to point out, though, is that it doesn't take away from the idea of investing with fundamentals, because often you will short a stock if you think that it's either overvalued or that there's some underlying fundamentals of the company that are going to drive the price down. So if you don't always have to invest, this gives you the option to invest, I guess, if you think a company is going to put out a poor performance. But have you ever shorted?
Have I ever shorted?
Yeah.
No, I don't know who to borrow shares of.
I'll give you something.
It's not really something that we can do. We probably could. It's not something I have done.
No.
No.
Yeah, we can't do it in its purest form.
Yeah, and if we wanted to, there's also a way that we could use options to short, but to be honest, that's just a topic for
Let's
another
not go
day.
there.
It's fraught. It's a lot riskier, so it's not really something that we want to get into the weeds on. If you want to know more about it, speak to someone a lot smarter than us.
Yes. So some stocks are renowned for being the most shorted stocks on the market, and that means that they have a higher proportion of or percentage of their shares, I guess, are shorted by institutional traders or whoever it may be, sitting there waiting for the price to drop. So before we go into Blue Sky, Ren, I just thought I'd give the top, say, 5 shorted stocks on the ASX at the moment.
Yeah, sounds good.
Zero Resources, 21.4% of their stocks are shorted. Domino's is always a company that is shorted, and 17% of Domino's is shorted.
Yeah.
JB Hi-Fi coming in at number 3, 16%.
Okay.
Galaxy Resources, which I own, 14%.
Yeah.
And the list goes on. Main Pharma, which is actually one of the stocks that is the stock that I picked for my 2018, comes in at about number 10. Then you've got Myer at 10%, Retail Food Group, Flight Centre. So some of the big companies out there.
A lot of them are just retailers, though. Myer, JB Hi-Fi, Flight Centre. Yeah.
It's in there.
They're just all
APN Outdoor,
Yeah.
Flight Centre, yeah. So there you go. Just a bit of a quiz thing there for you.
I love it. I love quizzes where you just give me the answers as well.
I know, how good. You did really well.
Yeah, thanks, man.
So what do you got? What's this Blue Sky you speak of?
Well, I guess to introduce it, we should talk about when you go long on a stock, the great thing is as long as you're generally right, you don't have to be specifically right in terms of timing, because your timing isn't capped. You can hold a long position for as long as you want. If you're a short seller, because you're borrowing the shares of someone else, or if you're investing in options, there's generally an expiry date on those options. You have to be right, but you also have to be right about the timing. So
Yes.
What we've seen is the rise of these activist short sellers, shall we say. So, back in the day, I might have borrowed shares off you and sold them into the market, betting a short position, and just hoped that the rest of the market realized the same thing that I realized, and the price went down in the time span that I had borrowed the shares from you. But what we see now is short sellers taking a short position and then going out and convincing the market that they're right. And so there's some very famous examples of it. But one that we've seen very recently, like this week recently in Australia, is Blue Sky. Now, they are an alternative investment manager, ASX code BLA, for anyone who's interested. What they do, they invest in alternative investments, so things that aren't listed. So, they started by investing in Australian water rights, and then they'll lease those water rights back to farmers. How do you price that as an asset? That's difficult to do. So where this short seller, this American company, Glacius, has come in, has said that Blue Sky are mispricing their assets and misleading the market. And so Blue Sky is saying that they own, or they've invested in $4 billion worth of assets. And Glacius are saying, nah, they're wrong. Their assets are only worth $1.5 billion. And so Glacius released a 67-page report But saying as much, they said the company's share price is 77% overvalued.
Wow.
And what happened was the market freaked out. On the 27th of March, they were trading at about $11.50. And by the 5th of April, so a week later, they were trading at $5.50.
Oh.
So they dropped more than half in a week on the back of this report from the American company.
Oh, who would have a big short position?
Yeah,
in
yeah.
Yeah, so they're doing it for their own good.
And you know what? If this American company is right, full credit to them.
Yeah,
because
full credit.
It's good because then the Australian company was misleading
Yes.
either intentionally or unintentionally. But it's good because, you know, the market is pricing it more efficiently now. But
Yeah.
what the Australian company is arguing is that they are pricing their assets correctly, and this American company is just trying to make a buck by attacking them.
Yeah, because companies hate being shorted.
Yeah, yeah.
When they find out that they're one of the most shorted stocks, they try and avoid the news like the plague.
Yeah, so the Blue Sky CEO, he did an investor call in response to it, and then... So he did an investor call, didn't take any questions, and then went to ground for a week. And so everyone was a little bit sus about that, and that probably exacerbated the issues. I think it's sort of calmed down a bit. I don't think the sell-off is continuing. I mean, we're recording on the weekend, so it's definitely not continuing now.
I guess the question is then, if that company is convinced that they've overpriced the assets by 77% or whatever, why has no one else made such a claim? I wonder. And do you have any idea if they are right? I mean, they obviously have some motivation because they'd shorted the stock, but if they hadn't shorted the stock and this company had come out and said they're overvaluing their assets by 77% and their share price drops from 11 to 5, do you think there would have been as much controversy?
Look, I don't really know, to be honest. I haven't looked into it enough. It might just be that it's a, I guess, easy target because, you know, pricing things like water rights is probably near impossible.
Tough, yeah, tough.
You know, a normal investment manager, you just add up the different shares and bonds and stuff and cash they're holding, and you know, you can give a number. Like if a fund has $1 million in shares, you know it's worth $1 million. But if a company has paid $1 million for water rights and held them for 15 years, what do you value that at? Like it's just I guess it's the nature of the alternative investments.
Yeah. Interesting.
I don't really know, to be honest, but it's an interesting one, and it's a good example of this new breed of activist short seller who decides, rather than trying to bet on the timing, they decide to make the timing.
Interesting. I'm going to get out there and start slamming companies and see what happens.
There's a few other interesting ones. Herbalife, the big American supplement company, Bill Ackman, the hedge fund manager, had a massive short position in, and he was going out into the market and claiming it was a Ponzi scheme and a pyramid scheme, blah, blah, blah. They made a documentary about it on Netflix called Betting on Zero that you can check out. He actually has sold off his short position because the company kept going up in value. Another one is Valiant Pharmaceuticals. There's also a doco about that on Netflix.
Yeah, really well worth watching.
Yeah, it's the doco is called Dirty Money, and this time the short sellers were successful. One of the main activist short sellers was an Australian guy, so go Australia, I guess.
Woo!
But yeah, so it's like the Valiant one, I reckon, is a great example of where these activist short sellers are doing the market a massive favour.
The right thing, yeah.
Like they're pointing out an issue with the company.
Watch the doco.
Yeah, watch the doco. So in that example, great. In this example with Blue Sky, I guess it's too early to tell who's right.
All right, well, we got to wrap it up there. That was a short.
Yeah, good.
That was, we've got to wrap it up there. And I hope you guys learned something about shorting. I guess the key takeaways from that are that it's very risky, but it's an investing strategy that is used by many of the professional investors, as we said, to make money on the downside, essentially, betting against a stock, whereas we're all about stocks going up. So very risky. Ren and I both haven't done any shorting, and as we said, that it's something that we probably can't do in its purest form. But I'm certainly going to get out there and start slamming A2 milk to drive that thing to the ground.
I look forward to reading a 67-page report.
All right, Ren, well, good to chat, and have a great weekend.
You too. Go the Swans.
Go the Swannies, and we'll talk next week.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.